Hello, everybody. I'm Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I'm going to get started with the stats here like I always do. Not a big surprise, but basically looking at where we were last week, which was March 2nd to the 8th, are the stats that I have, is that the single-family homes were 426 for the week, down from 446 the week before. Now, in my opinion, that's really good news because 446 was the end of the month, and so now the fact is that we're back to that normal kind of volume. We were really low in January, which is kind of typical, but we were a little lower than normal, but now we're back to where we need to be. The median price is $430, which was $420 or $425 last week. I'm not sure, but it's just up a little bit. The inventory increased by 29, and that takes us to 8137. So what that all means is that the months of inventory overall we're at 4.41, which is considered a normal market, and that's on the single family homes, obviously. Of the 426, 38 of them were under 250, 31 were between 250 and 300, 114 between 300 and 400, 95 between 400 and 500, 124 between 500 and a million, and there were 24 that sold over a million. Looking at the months of inventory, like I said, overall is at 4.41, 3.41, and 3.71, kind of up to 300. Then we're still in the 3.42 to 400. Then we go right at 4 months at the 4 to 500. And then 500 to a million is 5.36 and 8.01 based on the over a million. Now, the list ask price ratio is at 96.51 overall. Under 300 was at 95.22 and 92.28 under 250. And then over a million was at 93.4. And then everything else was right at 98, the high 97s or 98, which is very typical for what's going on. So the lower end and the higher end is where where there's a little bit of negotiating. Now, you might think under the 300 that we're still at a low inventory amount in the less than 4 months. But basically, the bottom line is that what happens with all of those properties is that they usually do need some work. When you're looking at the median value of a single family home at 420, something that's below that usually needs some work. So usually a lot of times those are cash buyers that are coming in and buying that, which I don't have the percentage of that this week in regards to what was going on. But when the number of cash buyers is in there, they might get a little bit lower for the price as well. So that's also, added in there when push comes to shove. So looking at the condos, townhomes, and villas, there were 112 this week. It was 111 last week, so very consistent, which is great because, again, last week was the end of the month. The median price increased to $299,950, right below $300,000. But the thing that's crazy about them is the inventory. It only went up by 15, but the inventory of condos, townhomes, and villas is quite different than the single-family homes when we're looking at that. So the inventory is at 8.93 months. So it's a buyer's market when it comes to condos, townhomes, and villas, in my opinion. Of the 112, there were 39 of them that were under 250 and 17 between 250 and 300. And under 250, believe it or not, there are 10 months of inventory. 8.99 from between 250 and 300. Between 300 and 400, there were 35 properties that sold and 7.25 months of inventory. Between 400 and 500, there were 16 that sold, 7, again, about 8 months of inventory. Between 500 and a million, there were 5 that sold, and there are 14 months of inventory. And over a million, nothing sold, so we don't have any figures on that. But the list of sale price, you might think that's whacked off too, but it's really very close to what it is on the single family homes at 96.97. Under 250, this one was at 96.01. So defying the norm a little bit there. And then it was at 95.69 between 250 and 300. Then it goes, the same as the single family homes, hovering right around 98% when it comes to the list to ask price ratio. So the thing that I think is great about going over the stats every week and looking at where we're at is that we're finding that basically things are consistent, which nothing odd or weird happening in the market, which is good. So it kind of gives you that predictability, that ability to kind of forecast what you may want to do when it comes to the market and figuring that all out. And so that's what we think is, it's like that's what I like, is to see that consistency or to be able to predict kind of what's going on and what we expect to happen and all of that kind of good stuff. When it comes down to it, I think that it's really important for people to, find that right property for them. The interest rates have been coming down slightly every week for the last 3 or 4 weeks. And so that's good as well. I was just reading something this morning that said that they expect that, until the interest rates are at 5, that's kind of what they've been saying for years is the magic number. And now they're still in the 6s. Now, there are some abilities for you to buy down the rate, that the seller would do that for you. Builders are very on top of that and doing that quite a bit. And then there are some sellers that are willing to do that as well. I did read an interesting article this week that talked about rent to own was catching on with wealthy buyers. And affluent home buyers are increasingly interested in rent to own transactions, not because they're unable to afford the down payment. These agreements can give buyers high-end homes as an opportunity to stabilize the price of the home while waiting for potential better financing. And it allows buyers to live in the property and delay the purchase until borrowing costs decrease. And, so there are 2 common types, which is our lease purchase agreements, which require buyers to buy at a fixed price, and lease options, and that gives the buyers the choice to purchase. And then there are also the other transactions give the buyer a negotiating tool, as where the part of the rent is credited towards the purchase price. So in our area, there are a couple of companies that can assist you in the rent to own. Some of them are not in the market. There are some other companies that were in the market that are not in the market now. And the reason for that is, the company that still exists that does the most of them, that is one that you can actually take part of your rent and put it towards a down payment. And they want you to purchase the property within 3 years. So that's kind of what the scoop is on that. If you don't buy it, there is a fee that you lose when it comes down to it, and that's based kind of on your credit score in regards to what's going on and everything. So there is a premium to pay. So what happens with a lot of people is you might look at this rent to own thing, and then when push comes to shove, you're like, well, it probably makes more sense for me to just go ahead and buy it now. So obviously, there are fees to all of these things that happen, but you do usually lock in the price when you're doing it. There are things that you need to be careful as a seller, because how is the maintenance and that kind of thing handled? It's usually still left on the seller's shoulder. So a lot of times for an individual seller, it's not a good thing. But with these companies, it's something that they do to scale, and that definitely helps you and them and everybody in between. So what I'm trying to say is there are options out there. You just have to look at what's going to work best for you. So I find it best to sit down with myself and go over kind of, what the scoop is for you and your family, and then we go ahead and put that plan together, whether it's rent to own or whether it's purchase now or wait or whatever it is. But I've got a lot of great stuff coming up in the upcoming segments in regards to kind of what's going on even further in the market and insurance and all kinds of good things that came out, the financial forecast for Florida in the upcoming 2025. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and I will see you after the break. Welcome back, everybody. I'm Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So, like I mentioned, there is the Economist report that came out that kind of talks about the state of the market and really what's going on and compares what happened in 2024 and what it looks like is going to happen in 2025. And basically that one interesting fact is that 2024 saw the total number of closed sales for all property types in Florida at the lowest level since 2011. So the bottom of the market when we had the major price adjustments and stuff in 2008 was until mid-2010. So we were still kind of, we were heading up a little bit and a little skepticism and everything was going on. But so 2011 was the lowest number of properties that have sold in a year. And that was reflected all last year. Our inventory was growing and basically properties were selling, but they were not selling as fast and they were not as many selling on a monthly basis as there have been in the past. And I've been talking about that for quite some time. So this just confirms that that's basically what happened. And what they're saying in here is that the good news is that the worst of the pandemic era inflation hopefully is behind us, and Florida was able to weather this economic storm better than a lot of other places in the country. We had strong employment growth and moderate migration. It kept demand for housing afloat despite the hurricanes and everything that had an impact on the west coast of Florida. And that is really true. And I believe that that's why our prices have maintained where they are, and why there really isn't the big reduction is because we did have people coming from out of town in order to, and from other places in the country to keep our prices consistent, and that's absolutely what happened. Here's some of the numbers for Florida is that there were 133,200 jobs created year over year that came to the state, and the homeownership rate is at 67.3%. We have 109 million visitors that come annually to our state, which we love that, and 125 billion in visitor spending is what happens as a result of that. Now our economy is at 1.335 trillion. So 125 billion is a big number, but it's only a little bit less than 10% of our gross domestic product. So tourism is a really big important, but it may not be as big as you or I think it is and everything. One of the things that's going on right now is first-time buyers are different today. They're older, wealthier, and using different sources of income for both purchase and down payment. They're using stocks as a source of down payment in addition to the bank of mom and dad, as well as good old savings. First-time home buyer market share decreased to a historic low of 24% this year, which was down from 32% last year. And the median price of home buyers is at an all-time high of 56 years overall. It was 49 last year, and 38 years old for first-time home buyers, which was 35 last year, and 61 for repeat buyers. So income for 2023 rose to $108,000 108,800 from 107,000 in 2022, and first-time buyers had a median household income of 97,000. So basically, one of the things that they're saying that the reason for this is that more adult children are living with mom and dad than husband and wife. Nearly 35% of adults aged 18 to 34 lived with parents in 2023, whereas only 21% lived with a spouse. So 35% lived with their parents between 18 and 34. So, and in Florida, Generation X through the younger boomers make up 38% of owner-occupied households, whereas only 22% of households are millennials and Generation Z. So basically, in looking at this, 21%, 1% of householder owners are less than 25 years old. 21% are between 25 and 44. 38% of households owners were between 45 and 64, and then 40% of the household owners are 65 and older. So big numbers, but one of the things that they think is that is a metric to watch is the months of supply of inventory, is that we're leaning toward a balance in our market. And that's what I've been talking about all along, is that in most of the price points, we're in a normal market for houses. Now, condos, we are in a buyer's market. And like I talk about all the time, that you really need to look at the balance of the whole thing. You need to look at the balance, but then in addition to that, you need to be very focused on what you're looking at. Looking at a specific neighborhood. I was looking at a neighborhood in Reunion, which is, in, on that Osceola Polk line down there in that Champions Gate area, and a lot of vacation homes and everything in there. And, their inventory in one development that I was looking at is basically, about 3 or 4 months supply. So it's kind of right there with the single family homes. So you can't really say that every community is the same. Everything is very, very local. And so it's really important that you look at what's local for your specific community and everything. There was another condo development that I was looking for on the north side of town. And in that, they've got about a 12-month supply of condos that are there. So that's what I mean by it's very extremely local. And so when you're, making the decisions and you're looking at, who's going to be buying this property and how can we market it properly, I was going through for these specific developments when I was looking at who actually bought them and who, and I can't, and you can't tell everything, but you can tell, who paid cash for it, what kind of financing that they got. And then I can look at the tax records and see if it's people from out of the country buying it or if they're locals, and if it looks like they're actually going to be living there or if they're buying it for investment and everything. So I can't find out everything, but there's a lot of information that I can find out. And so in looking at that, it was very interesting to see, who's buying it, because if I'm going to be marketing that property, I obviously need to know who to market to. It's like I want to go where the buyers are, obviously, in looking at it. And so I'm going to determine who those buyers are. And then those are the kind of people that I'm going to be tailoring all my advertising to, and my advertising medians through as well, that actually let them know basically, what the scoop is in regards to what's happening. So it's really interesting and fun for me to actually go in and kind of figure all this stuff out. And so that's one of the reasons why sellers like to work with me is because we do that in-depth analysis to really figure out what's going on, what's going to work for them, what's going to make the difference in getting that property sold fast and for top dollar, if that's what their goal is. And if they want cash offers, we obviously have those as well. So we come in with the finding out what the seller's needs are and then going from there. But our market is one that you can operate optimally within it, which is what I do on a daily basis. And, I think that you're out there and you're looking for housing, whether you're a buyer or seller, that's what you need to do is optimally look for what's best for you and your situation. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. I'm Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I wanted to talk about insurance costs today and replacement costs. And basically, insurance is a big thing when it comes to purchasing a home as well. And just if you already own a home, insurance is a big thing in Florida. Now, we have come so far in the last few years in regards to insurance and everything. I mean, they took a big jump and everything a few years ago. And it's primarily because of the litigation that happens and everything. And so as a result of that, there was some legislation that was done and things have kind of calmed down a little bit, is what everybody's telling me. But basically it's saying here that the cost of annual premiums for homeowners insurance has been one of the hottest issues facing current and prospective homeowners over the last several years, which is absolutely true. And there's, everybody thinks, it's due to the hurricanes and other weather events, but there are also non-weather related contributions to spiking costs, including the cost of litigation. But there's one thing that's often forgotten, and that's the cost to replace the things that we're insuring has gone up significantly as well. And if insurance companies eventually need to increase what they're charging to cover the loss that contribute to rising costs. So there's a huge rise in the population growth, and this is between from the Census Bureau, that the percent of population change from 2011 to 2023, Florida's population went up 17.3%. Now, the only other state that's on this list, which is about 20 states that went up higher than Florida, was Texas, which was at 19.6%. Of increase in population. Some of them are at 3, one's at a negative 0.2, that's Mississippi. But, they're kind of all over the map. And the only ones in the double digits are Georgia, Delaware are both in the 12s. North Carolina is in the 12s. South Carolina is in the 13. And then everything else in here is, in the single digits and everything. But the increase in the change in the median home value change from 2011 to 23, which remember I said just a few minutes ago that we hit bottom in 2010 and the prices were really too low. When the market changed I got my license in 2005, and basically what happened is that the prices, when I first got my license, they were going up 5% a month. And when I was looking at it, I would talk to other people and I would say, there's no way that the houses can go up 5% a month and sustain that. And they did that I got my license, they had been going up, I think it went up like 40% that year. And I said, there's no way, because there really wasn't any reason for it to happen other than everybody was like, hey, I'm going to buy a house in Florida or whatever. And so basically, the prices were going through the roof. And I remember in the fall of 2005, after they had gone up 40% that year, everything just kind of stalled. And the prices hadn't started falling yet, but the traffic just kind of stopped and people were not looking at houses. They were going, I'm not going to pay that for that house, is kind of what the conversation was. And then what happened after that point in time is that they started to tumble. And so they started to tumble actually at the beginning of 2006, and they continued to tumble until mid 2010. So to the point where I remember there was a condo in Celebration, and when I remember the lady had paid $700,000 for it, and I remember telling her that and she wanted to sell. She lived in Miami. She wasn't here. She couldn't cover, with rent what was going on with it. And I told her, I said, well, in my opinion, you can either lead the market and, cut your losses now, or you can follow it down and who knows how far it's going to go. So she took my advice and she did end up losing about $50,000 on the property. But the thing is so she sold it at about $650,000. She paid $700,000 for it. Those properties went down to under $100,000. So if she would have hung on to it all that time, she would have just continued to lose. And I could see that that's what happened. And basically, like I've been telling everybody now, the indications and everything that I see is that the market slowed, but it is not falling. And, and people, what happened in our time when it slowed is the interest rate went from 3% to 6% to 7%. And like I said in an earlier segment, it really needs to come at about that 5% for people to feel comfortable that they're getting a good deal when it comes to an interest rate. So there's a lot of people out there that are paying cash. We've talked about that before. And so they're not really affected by that. But if they do go to flip it or sell it or something like that, then they're going to be affected by the interest rate and everything out there of the people purchasing. But so basically, to say all that and kind of our history, and like I said, that those condos in Celebration. Well, I remember going to a house, and this was in Poinciana, and I've sold places all over Central Florida. So I remember there were some condos in Altamont that were selling for $30,000 a unit. So, it's all over. It's not just those places, those specific places, like I'm saying. Basically, what happened, though, is that there was a place in Poinciana that I remember that it was a brand new house that was built in 2005, and this was about 2010. It had been bought by a UK resident. They had gotten a loan on it. And so the bank had foreclosed on it and they put it on the market. So this is a house that no one has ever lived in. It was in perfect condition and it was on the market for $50,000. And I was like, oh my gosh, I don't know how they could go much lower. And they really didn't. They didn't go any lower than that. I mean, there was no way that you could build a house like that. There was no building going on. And so as a result of that, it's like when things did start coming back and people started building again in probably about 12, 13, the prices had started to come back and everything again. And so that's basically, kind of the journey that everything went on in order to make things happen and everything, basically. So what I'm going to tell you here is that I'm looking at the median price of homes that changed from 2011 to 2023. And this is according to the Census Bureau. So remember, that was a long way to get to this number, but basically, the population went up 17.3%. The housing prices went up 72.3%, which is the third lowest of the list. South Carolina went up 72.8 and Texas went up 106%. So I don't know what happened in those states and what was going on in 2011, but I know that we were just coming off of the bottom of going way too low. And so when you're looking at that 72.3%, you might say it's crazy. And, I think that maybe it's about 10% more than it should have been or something about that. But basically the housing prices were way, way, way too low in what happened. Like I said, that condo that had originally sold for $700,000, that went down to 100,000, and today they're probably at about the 400 range. So they've never come back up to that 700,000 level or whatever, but they're probably in that $400,000 range today. So, in real estate, when things do take swings, they go too far one way, too far the other way, and everything. So that's why I'm really happy with where we're at today, that basically, like I talked in an earlier segment, that, other people have come into town. The wages have gone up because of the different kinds of manufacturing, and so I don't see prices going down. But I started all this about insurance, and basically the replacement costs have gone up, and so basically as a result of that, that's part of the reason why the insurance rates have gone up as well. But the Florida insurers, meaning the companies, are passing along savings to the customers due to their reduction in defense containment costs, mostly because of legislative reform. So I'm happy to report that the insurance rates are coming down, which I went off on a tangent there, but I thought it was interesting, and hopefully you did too. And in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and I will see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty. And to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I wanted to talk today a little bit about a couple things I wanted to talk about before in this last segment of the show. And the first thing is basically that buyers want remodeled homes. So sellers are encouraged to showcase home renovations as buyers are increasingly seeking turnkey homes. They're willing to pay more for a remodeled home. And I think that you can see that they're willing to pay more for a new home because, they don't have to do anything or worry about anything. So basically, that's kind of what's going on. Now, this is a nationwide study, but it's something that Zillow did. So I found it very interesting. And they said that nationwide buyers are roughly paying $13,200 more than expected, about 4% of the median price for renovated homes. And that's what they found. So buyers looking for turnkey homes should be prepared for increased competition from other buyers is one thing that you need to know. And sellers, if you have made renovations, you need to flaunt that in your listing description. So basically what they're saying, they analyzed 359 Zillow keywords in the listing of more than 2 million homes that hit the market in 2024. Of those keywords, the term remodeled more than any other spurred buyers to pay more. So they're more often saved and they're more often shared when it says that. And so before the pandemic, the company found that home listings that included such terms as fixer, TLC, needs work, or good bones saw more demand and were more likely to sell. But now, today, the fixer-upper sells for about 7% less, and according to Zillow, and home listings with the terms needs work or TLC sells for 8% less. So if your house needs work, call it a fixer-upper. You're going to get another percent. But if you've done remodeling, you've got to flaunt it. And the buyers want a home that has everything on their list. They're looking for the most perfect house, but it might not be out there. Basically, they're looking for the most fully rehabilitated properties are sitting on the market and the sellers are cutting prices. Those are able to pay for a higher price for renovated homes can spread out the cost over the life of their mortgage instead of paying upfront to renovate. So that's one of the things that they want to do. However, I do want to let you know as a buyer that there are renovation loans that you can get. Like there is the 203K, which is an FHA loan out there that you can get that that they'll have contractors renovate it for you even before you move in. And so as a result of that, maybe there's less competition in that kind of home that you might want to look at. But it's all interesting when you're saying it. So it's really important to research these things, right? So if you have remodeled your house, you want to say remodeled home in your listing description, because you're going to get more money for it. And so those are the kind of things that we're definitely, looking for, want to make sure that we do for you and that you're checking that out and all of that kind of good stuff. Okay. So the other thing that I wanted to talk to you guys about is basically that what we're talking about now is how owners place a greater value in their homes today than they have in the past. So again, this is past pandemic is really what's going on. And 63% of the people put the as location as the top reason their homes have grown more important in the recent years. And then they have a sense of security is the number 2 reason, and that's 59%. So you do find that, it's the old term location is critical when you come to purchase a home. There's a homeowner that I sold her house recently, and she did buy a new home that was kind of out there in Davenport, and she works at Universal. And basically, it was too far. The commute was just too much for her. So she ended up purchasing another home near Universal and sold this house in Davenport. So even though it was a newer home, even though she didn't have to do anything to it, like we just talked about in the last thing, it was not a comfort zone for her. So you have to really look at it. And, it's like when it comes to a neighborhood, one of the rules of thumb is that you always tell people, hey, you might want to go there at different times during the week, during the day to kind of just get a feel for the neighborhood. Are they out there? Are the neighbors out there? Is it an active neighborhood or is it slowed down and quiet? And depending on what you're looking for, depends on what you really want. And it's this kind of the same thing today when it comes to traffic. You might want to try, hey, I'm looking at buying a house here. Okay, well, let's try, going to work a couple of days, from that location and see if it really does make sense. And maybe you don't drive it, but you could at least put it in your maps in your phone or something and look at, well, how long is it going to take to get from point A to point B right now at this time frame? Okay, let's look at now. And if you did that study, over the period of a week, you'd get a pretty good idea in regards to what the traffic's going to be. And is that going to be something that you want to do or don't want to do, or how is that all going to work? So you definitely, want to look at that. But more reason why people are liking their homes is because they're using their homes in new ways. 1/4 updated their homes to better allow for remote work. 19% now use their home for fitness or other hobbies, and 18% are growing foods and gardening. And so these changes are more common among younger and higher income people. And basically, among those who made functional changes to their home for lifestyle reasons, 44% that the changes resulted in additional monthly savings or income. For example, if they could work remotely instead of spending money on commuting costs, and exercise at home instead of paying for a gym membership. So those are all things that they wanted to do. And then functionality of the home. Most people say that they like having a large backyard for and converting bedrooms into workspaces. And 69% of the people would like to have an outdoor living space, and 61% want to have an extra room for hobbies, and 60% for gardening. So when you look at all of that for home ownership, if you are an investor and you're thinking, well, what kind of property do I want to invest in to have others, rent from me? And that's why single family homes, in my opinion, are your best option when it comes for rentals, because that's what people are looking for, is that they want to have that home type a feel, that they can have that outdoor area, that maybe they can have that garden or something like that. So if you do have a single family home and you're renting it out, that's something that I would consider, look at when it comes down to it, and something that makes sense for for your investment. But I'm out of time today, so in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you next week. Have a great one, everybody. Bye-bye.